is cheap. Results aren't.
Boom! Welcome, Knoxville. It's the Organized Investor Show, brought to you by Tennessee Wealth Management. Yeah, talk is cheap. Results aren't. And we're going to talk to you about that. Who's we? Who's we're? The four of us right here in the studio. East Tennessee's Financial Four, here to help you organize your investments, your retirement, and your affairs. Again, financial affairs. This isn't drama TV. This isn't the tic-tac or the TikTok. This is just real life money talk. I'm Ainge. You hear me on the Sports Animal, 9 to noon, Monday through Friday. With me from Tennessee Wealth Management is Megan Hubbard, Dean of the College Knowledge around here. She has a master's in curriculum and instruction. Also with us from Tennessee Wealth Management, my beautiful wife, Susan Ainge, studying for that Series 7 and dominating. And last but definitely not least, Jerry Goodman. Jerry, Megan's dad. Jerry, been called a lot of things in his life. Megan's dad might be the nicest one. That or, he's the guy that made me a ton of money. He's a CFP with 43 years of experience, formerly a VP at Merrill Lynch. And definitely not last, and definitely not least, Jennifer Johnsey, right here from Newstalk 98.7, helping us stay on schedule and pay attention.
So in reference to talk is cheap, here's the real thing about this industry. Everybody has an opinion. Everybody's got a pitch, don't they? But talk is cheap. Results, they aren't. Anybody can make promises. We'd rather show you what we've actually delivered.
So yeah, in football, you can have the prettiest playbook in the league, but if you're not putting points on the board, nobody cares. The scoreboard doesn't lie, and neither do investment returns. So instead of telling you what we think we can do, let's just show you what we've actually done.
During the first 9 months of 2025, the 210 accounts this team managed averaged a net rate of return of 33.2%. That's 3.5 times more than the Dow Jones Industrial Average. Over the past year, 29.8%. Over the past 3 years, 22.3% annually, and over 5 years, 18.3% per year. And over nearly 7 years, 17.1% annually.
Thanks, Megan. And these are net returns. They're after any kind of fee or cost. They're also posted in their entirety on the organizedinvestor.com for your viewing pleasure. Now, obviously, past performance doesn't guarantee future results, and these rates of return, they will vary depending on the risk tolerance and the objectives for each individual account, okay? But now you have the actual data to consider, and we're giving you basically the receipts, and we're happy to share them.
And these performance numbers, this is our game film, you guys. We're not guessing, we're measuring. It's what separates contenders from pretenders. Now let's talk about how we put the numbers on the board, right? Susan's talking about the scoreboard. Well, let's talk about the financial scoreboard. The goal is to improve someone's overall investment performance by at least 2%. So on $1 million portfolio, that's an extra $20,000 a year or $400,000 over 20 years.
And that 2% improvement comes from 3 different areas. So first, you have lower advisory fees, which is about 0.25% less than most advisors are going to charge you. Second, avoiding hidden costs in mutual funds and exchange-traded funds. And third, better performance through selective investment choices.
Think of it like recruiting a football team. You don't just build a championship roster by signing every player available, mutual fund. You scout, you evaluate, you watch film, and you pick the ones who can actually play. You want playmakers, not bench warmers. You want guys who can go out, move the chain, score touchdowns, not just fill out the roster. The 98 Vols didn't win the national championship by just taking every recruit who'd show up. Coach was selective. Identify the best talent and you go get it. Same thing we're doing with stocks.
Here's the problem with the typical approach that most advisors use. If your advisor has you in 15 to 20 mutual funds and each fund owns several hundred stocks, you might own thousands of companies.
So sure, you've got some All-Americans in there. You also got a bunch of walk-ons who shouldn't be on the field. You got the Heisman candidates mixed in with the guys who can barely make the practice squad. The stars are carrying the dead weight, and your returns suffer because of it. We call this diversification.
Dun, dun, dun.
And when it lands mediocre returns, we call that diversification performance. Oh, that's my line. Yeah, we're making these words up around here. It helps make the point more memorable. You wouldn't build a football team by signing every available player, so why build a portfolio doing it that way?
Instead of mutual funds, we use individual common stocks. No hidden internal costs, complete transparency, and better tax control. You actually know what you own because every company is right there on your statement. There's no mystery about what's in your portfolio. You can look at your holdings and recognize every single name. These are companies like Costco, Walmart, Home Depot, companies that you know, companies that you shop in.
So these are our core holdings. These are what we call dividend growth stocks, companies with a long history of raising their dividends year after year. Names like, as Megan mentioned, Costco, Walmart, Home Depot, Megan's favorite Smucker's Jelly. These are household names you recognize, companies, again, you probably shop at every week. Lowe's has raised its dividend every year for 60 consecutive years. Think about that, 60 years with dividend increases through recessions, through market crashes, through all of that.
That's not a fluke. That's consistency and quality management over decades. These aren't speculative bets on unproven companies. They're proven performers with track records that you can verify. They've shown they can deliver in good times and bad.
These stocks come from the Wells Fargo Diversified Stock Income Plan. We call it the DSIP list for short around here. The list has a 30-year track record averaging over 12% annually. Because investors view these companies as well managed, which they should, their prices tend to hold up better during market downturns. When markets panic, these stocks don't fall as far as the rest. That stability is crucial for the second strategy.
And that second strategy is what we call bargain opportunities. We all love a good bargain. When markets panic, like during COVID in 2020, the banking crisis is in 2023, or the tariff scare just back in the spring of 2025, we move quickly. We buy quality companies when they're on sale. It's like Black Friday for stocks, and we show up with a shopping list ready to go, ready to push someone down to get what we want. While everyone else is running for the exits, we're loading up on bargains. In spring of 2025, Jared and Jerry made over 12,500 trades in a single day. And that is not a typo. 12,500 trades in one day. That's a big reason clients are up over 33% for the first 9 months of the year.
Yeah, it's like the team's ready to blitz, but the quarterback sees the blitz. The defense is coming hard. Everyone's panicking, but you're just seeing that open guy. You hit the hot route. You don't freeze up. You don't panic. You execute. While other advisors are frozen, we're out there making moves, seeing the blitz, seeing the hot route. That's the advantage of managing at the security level instead of being stuck in funds. Flexibility, the ability to see it right when it's happening, that's what you do in investing too.
Eric, I think you had 47 sports analogies rolled up in that one little comment right
Where's my $20?
It's amazing. Oh, I didn't think it was possible. So when you're stuck inside mutual funds, exchange-traded funds, you can't take advantage of these opportunities. See, one part of fund might barely budge while another part takes a nosedive, but you can't just swap out one piece for the other. You're stuck in whatever the fund manager has decided to put you in. You're a passenger, not a driver. We manage accounts at the security level, not on the fund level. That means when opportunities show up, we can actually make moves that make a difference. We can sell what's held up and buy what's dropped. The flexibility is huge in terms of being a competitive advantage for us.
Another thing we help people with is consolidating scattered accounts. It's common to see money spread across different firms. An old 401k from a job someone left years ago, a couple of IRAs at different brokerages, maybe a random account their parents helped them open. Having everything fragmented makes coordinated management nearly impossible. Each account is doing its own thing with no one looking at the big picture.
Consolidating doesn't trigger taxes in most cases. IRAs transfer easily, and 401ks can roll into IRAs once you've left the company. The benefits are significant. Lower total fees, simpler tax reporting, and finally seeing the complete picture of what you actually own. It's like getting all the players in the locker room all on the same page, all with the same playbook.
People also ask how monthly retirement income works with individual stocks. Part of the return comes from quarterly dividends, and the larger portion actually comes from price appreciation. When we need money for a monthly withdrawal, we simply sell a few shares of something in the account. Think of your portfolio like a water tank. Withdrawals lower the level while growth raises it. If you're taking out 5% and the portfolio grows 18%, the tank keeps filling faster than you're draining it. Since our 5-year return is over 18%, a 5% or 6% withdrawal rate still leaves plenty of room for growth. Most withdrawals are done by direct deposit to your bank, same amount, same day each month. And yes, we can withhold taxes for IRA withdrawals if you prefer that.
So let's share a story that illustrates why receipts matter, what we're sharing matters. About 2 years ago, we met a gentleman, his name was Frank, at one of our workshops. Frank was about 67 at the time, retired engineer, the kind of guy that just loves a lot of data, doesn't like a lot of fluff. He wants to know the bottom line. So he spent his career analyzing systems and solving problems with numbers. So he wanted facts. and he wasn't interested in just theories or stories. So he'd been a major brokerage firm for about 25 years.
When we started talking about our performance numbers, Frank stopped us mid-sentence. He held up his hand and he said, "Wait a minute." He said, "I've been to a dozen of these seminars, okay? Everyone claims they're great. Nobody ever shows me proof." He was skeptical, and honestly, he had every right to be. So we did something different. We pulled up our actual performance reports right there. 10 pages of data, all 210 accounts posted on our website for everyone to see. Frank studied it like he was reviewing a technical manual, and he asked questions. He double-checked the math, which we would expect of someone like Frank, and he did his due diligence.
So when he finished, he looked up and said, and let me do it in Frank's voice, "In 25 years, my advisor never showed me anything like this." We were kind of amazed at it.
I feel like Frank would sound more sophisticated, but go ahead.
Well, Frank's 5-year return had been around 7%, okay? Ours was much higher. And he wasn't angry at first, but he generally was puzzled by this. He couldn't understand how he had missed this for so long. He said, let me do it in his voice, "I thought I was doing just fine because I had nothing to compare it to." Well, sorry, I'm trying to be in character here. So that's the problem when no one shows you the receipts. You don't know what's possible. You assume average is acceptable because you really never have anything to compare it to.
So Frank made the switch, and within a year, his performance improved dramatically. The engineer in him loved tracking the progress. He checked his account regularly, and he even kept a spreadsheet. He told us he finally understood what was happening with his money, something he had never felt before. Just last month, he called to say that he and his wife are planning a trip to Scotland, something they also had put off for a decade because they weren't quite sure that they could afford it.
So I'm going to take my best shot at Frank's voice because Frank told us...
This ought to be good.
Yeah, I'm going to record this. Go ahead.
"The numbers don't lie. I just wish someone had shown them to me sooner." That's the power of
Frank sounds like an evil villain right there.
Off a Thin Man movie.
Oh, you got to have voices. I learned that a long time ago when I was teaching first grade. So that's the power of receipts. They turn hope into certainty. They turn guessing into knowing, and they help people like Frank, and Frank is not a villain, finally take the trip they've been dreaming about.
So both Jared and Jerry with Tennessee Wealth Management, they use both fundamental analysis and technical analysis to make investment decisions. Fundamental analysis looks at company earnings, balance sheets, and business quality. It tells Jared and Jerry what to buy. Is the company well managed? Is it profitable? Do they have a competitive advantage? Technical analysis, though, it studies charts, patterns, and momentum. It helps Jared and Jerry decide when to buy or sell. Is now the right time to get in, or should we wait for a better entry point? Think of fundamentals as scouting reports and technicals as game day adjustments. You need both to win consistently.
Excellent summary, Mr. Ainge. On our website, the investments page is where you'd like to refer to. You'll find what's called a market pulse report. We created this. It covers short-term indicators like trend, momentum, breadth, volume, sentiment, all those fun types of factors, plus longer-term risk indicators and market outlooks that go out like 30, 60, and 90 days. We update it regularly so you can see exactly what we are seeing. And we're not hiding our process. We're trying to share it very openly because our industry is full of opinions, but facts really stand out. Transparency builds trust, and we want to earn your trust.
Now let's talk about what we're offering you because we practice what we preach. Everyone knows a BOGO sale, right? Buy one, get one free. Well, we've got something better than a BOGO. We have a get one free, get one free, get one free, get one free. That's 4 get one free.
That's 4.
That's 4, right? No strings attached. You don't have to buy anything. No fine print, no catch, just 4 things we want to give you.
Frank would say that makes 4.
First, for your investments, a full Morningstar report, usually over 100 pages, plus a plain English explanation of what it all means. You'll see exactly what you own, what you're paying, and how you're actually doing. No more guessing, no more wondering, just clear answers. Second, for retirement, a cash flow analysis called Envision to help you plan with confidence instead of guesswork. Will your money last? Can you afford to retire when you want? Well, we'll help you find out. And there's a sample on the retirement page of our website.
Third, for estate planning, free documents through our partner Trust and Will. Completely free for the will package, and only retitling costs if you prefer a revocable living trust. We've removed cost as a barrier because getting organized shouldn't break the bank. Too many people put off estate planning because they think it's too expensive. It's not. It doesn't have to be, and it's not with us. Fourth, just for fun, I will sign a football. Jerry bought him. He's got him. I'm signing them.
If we can find a pen.
All we got to do is just super easy. I'll put my old John Hancock on there. And that's it, guys. That's it. Pretty simple, right? 4, get 1 free. No cost, no obligation, no catch.
And to take advantage of any of this, you're going to need to have a conversation with us. We can't help you if we don't know your situation. So start with my dad's Ask Him Anything in 20 Minutes call. You can call him at 865-415-2070, and that number rings straight to his cell phone. So feel free to test it. You can also email us through our website at theorganizedinvestor.com.
So if you're worried about dealing with us, keep in mind that we have 240 families we deal with, 750 accounts. Some of these relationships go back over 4 decades. So keep in mind that we're here to help whatever way that you want us to. But you have to open up and give us a call so we can have a chat.
All right, guys. It's me, Ainge. Not going anywhere. My beautiful wife, Susan, and Jerry Goodman and Megan Hubbard from Tennessee Wealth Management, guys. We're East Tennessee's Financial for. This is the Organized Investor Show. When we come back, we're going to give you even more reasons to have a chat with Jerry.
For more than 50 years, families, businesses, and neighbors have trusted one name to make life's biggest moments unforgettable: Rose's Catering. Family owned, locally grown, serving this community since 1971. And now, Rose's is taking hospitality to new heights. Literally, inside the iconic Sunsphere, Knoxville's shining symbol from the 1982 World's Fair. Introducing Sunsphere Events. 2 breathtaking floors of panoramic views, elegant gatherings, and the warmth only Rose's can provide. Whether it's a wedding in the sky, a corporate reception, or a celebration with friends, Rose's and Sunsphere Events bring people together beautifully. Visit rosescatering.com or sunsphereevents.com to plan your next unforgettable event. Rose's Catering, a Knoxville tradition since 1971.
At the Grimes Agency with Goosehead Insurance, getting a quote has never been easier. With our industry-leading online quoting tool, you can answer a few simple questions and see real-time quotes from over 30 A-rated insurance companies right on your screen or phone, often in less than 30 seconds. The entire process takes about 5 minutes, giving you instant access to real prices so you can make sure you're getting the most competitive option for your home and auto insurance. Your information is never shared, sold, or sent to third parties. Everything goes directly to the local Goosehead Insurance office where Mike Grimes and his team review your results, run your reports, and confirm your final quote when you're ready. Call Mike Grimes at 865-281-1267 or visit www.tn.insure today to experience the future of insurance shopping. The Grimes Agency with Goosehead Insurance. Insurance the way you always wished it was done.
Erik Ainge is a host of The Erik Ainge Show on 99.1 The Sports Animal, weekdays from 9 to noon. He is not a client of Tennessee Wealth Management, but is compensated to both promote and co-host the Organized Investor Show.
If you were interviewing someone to manage your life savings, what would you want on their resume?
Welcome back to the Organized Investor Show. I'm Ainge, along with my wife, Susan, and Megan Hubbard and Jerry Goodman from Tennessee Wealth Management, right? It's the Organized Investor Show. We're East Tennessee's Financial for, here to help you organize 3 things: your investments, your retirement, and your affairs. If you missed the first segment, you can catch the whole show at theorganizedinvestor.com or search The Organized Investor on your favorite podcast player.
And if you're just tuning in, here's the quick version of what you need to know. For the first 9 months of 2025, the 210 accounts this team manages averaged a net return of 33.2%. That's 3.5 times higher than the Dow Jones Industrial Average. 5-year average was 18.3% annually, more than double many mutual fund portfolios. And these are net returns after all fees and costs posted on our website for anyone to verify. Past performance doesn't guarantee future results, but now you have a real benchmark to consider.
And as our lovely Susan just started off this little episode, the question really I want you to think about, seriously, if you're hiring someone to manage your life savings, your retirement, basically your family's future, what would you want to see on their resume, okay? What qualifications would you look for? Would you hire an employee without checking their references? You wouldn't bring someone onto your team without seeing what they've accomplished. You would want to see their track record. You want to verify their claims. So why do people hand over their life savings without even asking the same questions?
Think of this as a job interview. I'm sure everyone that's listening has had a job interview, right? Or been on a job interview, maybe conducted a job interview. And this would be our track record during this job interview. 33.2% year to date, 29.8% over the past year, 22.3% over 3 years, 18.3% over 5 years. Those numbers are our references. This is our resume. This is our highlight reel.
And if you're the hiring manager for your own financial future, these are the numbers you should be looking at. Before you trust anyone with your money, shouldn't you see their results? You wouldn't hire a quarterback without watching his game film first. You wouldn't draft a player based on promises. You'd want to see him perform under pressure. That same standard should apply to your financial advisor.
In football, every coach has a win-loss record. You are what your record says you are. It's the first thing you look at when evaluating their performance. Before anything else, before personality, before philosophy, you check the record. Can you imagine hiring a head coach without knowing their record, their resume? It would be absurd. The athletic director would get fired, ran out of town. The boosters would be calling for their head before they even signed the contract. Yet people trust advisors sometimes for decades without ever asking about their track record. They never see the win-loss record.
So the 2% improvement goal actually comes from 3 areas: lower fees, avoiding hidden costs, and being more selective with your investment choices. On a $1 million portfolio, 2% is an extra $20,000 per year, or $400,000 over 20 years. That's not pocket change, my friends. That's life-changing money. We avoid mutual funds and ETFs because owning 15 to 20 of them means you own thousands of stocks. That's diversification.
Dun, dun, dun.
You've got the superstars buried in with a bunch of players who shouldn't be on the roster. You've got the game changers being drugged down by the underperformers.
So instead, we hand-pick dividend stocks, dividend growth stocks from this DSIP list from Wells Fargo, okay? Companies like, we keep repeating this, Costco, Walmart, Home Depot, Lowe's, General Dynamics, Smucker's Jelly, my personal favorite. These are companies that have proven track records of raising their dividends, some of them like Lowe's, for 60 years. They've demonstrated consistency through the good times, but also the bad. So these prices, they hold up better during market downturns, which sets up for the next strategy, which is our bargain opportunities.
So when markets panic, we move money from what's dipped slightly into quality companies that have dropped significantly. We buy the fear and sell the greed. That flexibility is why clients are up over 33% this year.
So let me share a story about what can happen when you don't check references. A few years ago, we met a couple named Tom and Barbara. Don't give you their last name, but that's their first name. Tom had retired basically after 35 years as a plant manager. Barbara had been a nurse for around 30 years. They worked hard their entire lives. They saved diligently. They'd done everything right, tried to follow all the rules. They had about $1.2 million with an advisor that they'd used for about 20 years. Good people, did everything right except one thing. They never interviewed their financial advisor.
Tom told us they picked their advisor because he was friendly and came recommended by a coworker, which that's what a lot of people do, right? That was it. A recommendation and a firm handshake. They never asked about performance, never compared him to anyone else. They just assumed he knew what he was doing because he had a nice office and a firm handshake. They trusted without verifying.
So when I asked Tom, would he hire somebody at his firm without checking their work history, he laughed. He said, well, of course I wouldn't do that. He said, I want to see what they've done. I need to check their references. I look at their numbers. So he had spent 35 years hiring and managing people, and he knew better. So I asked, what was the 5-year return for this advisor? And he didn't know. He'd never asked. In 20 years, he'd never once asked the advisor for his performance report. Now, and the look on his face told me, he was really realizing the disconnect here.
When we ran their Morningstar report, they discovered their 5-year return was barely 6%. Barbara's face went pale. She said, we trusted him because he was nice. We never thought to ask for proof. They had handed over their life savings and never conducted an interview. They never asked for references. They never even checked the track record.
Well, and here's the thing. I bet their advisor is a nice guy. I'm sure he's pleasant to talk to. I'm sure he does have a nice firm handshake and sends a nice holiday card. Nice doesn't pay for retirement. Nice doesn't fund your grandkids' education. Nice doesn't put points on the board. You wouldn't hire a contractor to build your house because he's friendly and has a good handshake. You'd want to see his previous work. What other homes has he built, right? You'd want references from past clients. The same standard should apply to someone managing, the most important thing, your life savings.
So good news, Tom and Barbara made the switch to our approach. Within 18 months, their portfolio had done much better, and they couldn't believe the difference. They kept checking their statements, thinking there must be a mistake. Tom called me one day and said, I just wanted to make sure these numbers are real. They were real. They're still real. Tom told us recently, I interviewed hundreds of people over my career, and I can't believe I never interviewed my financial advisor.
He actually said, if one of my employees had been that much of an underperformer like that, he said, I would have let him go years ago. That's the hiring manager mindset that we're talking about here. Your money deserves the same scrutiny that you give to other important hires in your life. Maybe even more, because this is your retirement that we're talking about, your financial future. This is basically what's going to be your family security forever.
Now let's discuss what many advisors actually do to justify their fees. Because when you start looking behind the curtain, you might be surprised. And when you start asking questions, you might not like the answers. A lot of them charge a fee, then invest clients in a preset portfolio of mutual funds selected by their home office.
They're not making the decisions. Someone at corporate headquarters is, okay? Someone who's never met you, doesn't know your situation, doesn't know your goals. Those funds already have managers charging their own fees inside. So you're paying the advisor, you're paying the fund manager, and sometimes there's even another layer on top of all of that. It's fees on top of fees on top of fees. What exactly is the advisor contributing? What are you actually getting for your money?
In many cases, they're essentially doing paperwork, showing up for a couple of annual meetings. They're checking the boxes, sending out quarterly statements. They're not selecting individual investments or making tactical decisions. They're not watching the game film, calling audibles. They're not adjusting the strategy when the conditions change. They're just implementing whatever model the firm has assigned to them, okay? That's running the same play regardless of what the offense shows out there.
That's like hiring a head coach who just runs plays sent down from the front office. Like we're talking about, no adjustments, no game day decisions, no audibles at the line of scrimmage, no seeing what the defense is doing and then adjusting accordingly. It's like running the same play and beating your head against a brick wall. 3rd and long, let's call the same play we called on 1st and 10. Let's call the same play we'd call on the goal line. No, that's not how it should work. And then you'd fire the coach that was doing something like that. The boosters would want him gone. The fans would want him gone. The message boards would be on fire. Yet we let advisors do that for us with our portfolio? Come on.
So we have an example on our website showing a mutual fund advisory account with a 5-year return under 9% before the advisory fee was actually deducted. So after the fee, it's even worse. You're looking at maybe 7% or 8% net. Our 5-year net return is over 18%. That's more than double. That's not a small difference. That is a massive gap. And those funds have internal costs of 0.79% annually. That's $7,900 a year on $1 million account that quietly disappears. That could be like a really nice trip for your family.
A couple of them.
You never see a bill for it. It just comes out of your returns. It's like having a leak in your water tank that you can't see.
If you hired an employee who was costing you that much in hidden expenses for whatever way they would happen to be doing it, you would want to know about it. You'd probably fire them on the spot. You'd wonder how long has this been going on and how much had it cost you. And that's exactly how you should feel about these hidden investment costs that are high, slowly and kind of mysteriously taking away your money.
The pay-to-play diagram on our site explains how firms receive payments from product providers. It's an eye-opening look at the conflicts of interest built into the system. If your advisor is getting paid to recommend certain products, you deserve to know that. It's like finding out the referee has a side deal with one of the teams.
You feel like that all the time.
You'd want that disclosed, wouldn't you? I would. You'd question every call after that. Transparency matters when it's your money on the line. We also help with consolidating scattered accounts, old 401ks, various IRAs spread across firms. It's like having your playbook scattered across different locker rooms. Consolidating doesn't trigger taxes in most cases, and the benefits are significant. Lower fees, simpler taxes, and finally, seeing the complete picture.
Let me ask you, the listener, directly. If you were interviewing someone today to manage your retirement, what questions would you ask? I'd start with, what you've been hearing us say, 5-year track record. Then, how do you actually invest my money? What's the strategy behind it? What fees am I paying? All of them, not just the obvious ones. What did you do during the last market downturn? Did you sit there? Can you show me proof?
If your current advisor can't answer those questions clearly, that's a red flag. If they get defensive or change the subject, that's an even bigger red flag. You wouldn't hire an employee who couldn't explain their qualifications, would you? You wouldn't trust a coach who couldn't tell you his game plan. Your financial future deserves the same scrutiny.
So let's talk about risk, because another common question, in this kind of job interview situation is people want to know, what can go wrong. And they usually answer the question, kind of with a question and say, do you think the companies like, again, Walmart, Costco, Home Depot, these types of companies, you think they're going to go out of business? And most people are going to say, no, they're going to be around for a long time, longer than me. So basically, these companies have survived recessions, market crashes, and every other kind of turmoil out there you can imagine. If you want a better return than CDs, owning these large dividend-paying stocks is really hard to beat. The key is matching the strategy to your goals and your comfort level. And we're not going to put you in something that keeps you up at night.
Monthly income works through dividends, plus selling a few shares as needed. Think of your portfolio like a water tank. Withdrawals lower the level, while growth raises it. Since our 5-year return is over 18%, a 6% withdrawal rate still leaves plenty of room for growth. You're not draining the tank. You're just taking some off the top while it keeps filling.
Our account minimums are probably less than you think, typically around $50,000 even, spread across multiple accounts. We're not just looking for millionaires, okay? We want to help people who are serious about their future. Most withdrawals are done by direct deposit, same amount, same day each month. And yes, we can withhold taxes for IRA withdrawals if you want us to do so.
So here's the bottom line from a hiring perspective. They've given you the track record and their process. They've shown you the game film. They've answered the interview questions. Now it's time for you to decide if they make the team.
And let's not forget the 4 get ones, the free ones that we're talking about. Morningstar report with an explanation, retirement cash flow analysis called Envision to help you with your retirement cash flow concerns, free estate planning documents through our online partner Trust and Will so your family can be protected, and a signed Tennessee football by Erik, just because we like to have a little fun. No cost, no obligation, no catch.
To get started, email us through theorganizedinvestor.com or call Jerry at 865-415-2070 for his Ask Anything in 20 Minutes chat. 20 minutes to ask whatever's on your mind. No pressure, no obligation. Think of it as the first round of interviews. You're interviewing us to see if we're a good fit.
Or you can email us through theorganizedinvestor.com. We work with 240 families and 750 accounts, and some relationships spanning over 40 years. That kind of longevity doesn't happen by accident. It actually happens because we deliver results. Consider this our job application, and we'd love the chance to earn your business. Let us show you what we can do.
All right, y'all, you're dialed in here to East Tennessee's Financial 4. It's the Organized Investor Show with me, Erik Ainge, my wife, Susan Ainge, Megan Hubbard, and Jerry Goodman from Tennessee Wealth Management. When we come back, we'll wrap things up, give you some final thoughts on why you need to ask Jerry anything in 20 minutes.
Rising high above downtown Knoxville, one landmark shines brighter than the rest, the Sun Sphere. Since 1982, this golden symbol of the World's Fair has defined our skyline. And now, it defines how Knoxville celebrates. Sun Sphere Events invites you to host your next gathering inside Knoxville's most iconic event venue. 2 breathtaking floors of panoramic views set the stage for unforgettable weddings, corporate receptions, and milestone celebrations, all framed by the glow of East Tennessee. From intimate dinners to grand galas, Sunsphere Events delivers an experience as elevated as its view. And with trusted local partners, including the culinary team from Rose's Catering, celebrating over 50 years in East Tennessee, your event is in expert hands. Plan your next celebration today at sunsphereevents.com. Sunsphere Events, Knoxville's most iconic event venue.
At the Grimes Agency with Goosehead Insurance, everything starts with one goal: putting clients first. The team is committed to adding value, providing clarity, and ensuring every client feels confident in their coverage and price. As a true brokerage, the Grimes Agency shops your insurance with over 30 A-rated companies, including Progressive, Farmers, Travelers, Nationwide, Liberty Mutual, and many more, so we can make sure you have great coverage at the most competitive rate. From home, auto, umbrella, and dwelling to life and jewelry insurance, they offer personalized protection for what matters most. With honesty, transparency, and a client-first approach, this is insurance the way you always wished it was done. Call Mike Grimes at 865-281-1267 or visit www.tn.insure to compare real quotes in minutes. The Grimes Agency with Goosehead. Insurance the way you always wished it was done.
Erik Ainge is a host of The Erik Ainge Show on 99.1 The Sports Animal, weekdays from 9 to noon. He is not a client of Tennessee Wealth Management, but is compensated to both promote and co-host the Organized Investor Show.
You compare prices before buying a car. Why not compare returns before choosing an advisor?
Welcome back to the Organized Investor Show. I'm Erik Ainge with Susan Ainge, Megan Hubbard, and Jerry Goodman from Tennessee Wealth Management. We're East Tennessee's Financial Four, and we're trying to help you organize your investments, your retirement, and your affairs. If you're just joining us, here's the recap.
So for the first 9 months of 2025, the 210 accounts this team manages averaged a net return of 33.2%. That's 3.5 times the Dow Jones average. 5-year average was 18.3% annually, and these are net numbers after all fees and costs. Past performance doesn't guarantee future results, obviously, but if those numbers seem high to you, that might say something about what you've been getting. It might be time to ask some questions.
And here's a simple question, like Susan just asked, right? You compare prices before buying a car, right? You never walk into a dealership and just pay whatever they ask without checking what other dealers are charging. You shop around, you negotiate, you do your homework. You'd probably spend hours online researching before you ever even walked onto the car lot. You'd never buy a house without looking at comparable sales in the neighborhood. You'd want to know what similar houses were sold for. You'd check the comps. You'd make sure you weren't overpaying. So why not compare returns before choosing an advisor? Why is your financial future the one thing you don't comparison shop? Why do people spend more time comparing phones than comparing financial advisors? It actually doesn't make sense when you think about it.
So we're giving you something to compare because without comparison, you're just guessing, okay? You're hoping things are going to be okay without actually knowing. Here's a data point you can actually hold up against your statements tonight. 33.2% year to date. That's through September of this year, okay? 18.3% over 5 years. That's enough numbers to compare. So pull out your statements, see how your numbers stack up. That comparison might be the most valuable homework you do all year, and it might change everything for you.
The 2% improvement goal we talk about comes from lower fees, avoiding hidden costs, and better performance through selective investing. On a $1 million portfolio, 2% is an extra $20,000 per year, or $400,000 over 20 years. That's not theoretical money. That's real money that affects your real life. We achieve this by avoiding diversification, owning thousands of stocks through mutual funds. Instead, we handpick quality dividend growth stocks. We choose the players that we want on our roster.
Companies like Costco, Walmart, Home Depot, Lowe's, General Dynamics, Becton Dickinson, and Smuckers. These are from the DSIP list, which has a 30-year track record averaging over 12% annually. These companies have proven themselves over decades. When markets panic, well, that's when bargain opportunities come. Quality companies, that's what we're getting at discounted prices. That's why they made 12,500 trades in a single day during the 2025 tariff scare. Flexibility and preparation make a huge difference. Being ready to act when others are frozen is a total competitive advantage.
So let me share a story about comparison shopping. Last year, we met a woman named Angela who'd been widowed 2 years earlier. Her husband, Richard, had handled their finances for 40 years. Angela had never looked at a statement. She'd never talked to the advisor. She never thought about this. She just let her husband handle it. She inherited about $800,000 and was terrified of making a mistake. She didn't know what she didn't know, and that scared her the most. Her advisor kept telling her she was doing fine and right on track, patting her on the hand and reassuring her. But Angela had no idea what fine meant, and she'd never seen a comparison or been shown what was actually possible. So when a friend mentioned our show, she decided to get a second opinion. She figured it couldn't hurt. Worst case, she'd learned she was really fine. We ran her Morningstar report, and she was stunned. Her 5-year return was barely 5%, and her advisor was charging nearly 1.5% in fees. After fees and inflation, she was barely treading water. Her money wasn't growing at all. She said, "He kept telling me everything was fine. Fine compared to what?" Exactly. Without a comparison, fine is meaningless.
It's like a coach saying, well, the team played pretty good without looking at the scoreboard. Effort doesn't matter if you lose by 3 touchdowns. You need the numbers to know where you stand.
So Angela decided to switch to our dividend growth approach. Within a year, her portfolio grew much, much better than it had before. She calls regularly just to say thank you. And for the first time after Richard passed, she said, I feel like I can actually take a breath here. She wasn't worried about running out of money. She told us finally she felt like someone was actually managing her money, not just collecting fees and sitting there and telling her it was fine. Richard would have been very relieved to know that I'm taken care of, she said. And I didn't do it in her voice, but that was her comment. Basically, comparison gave her clarity. And knowing her options, that changed everything for her. So now she's confident instead of being scared, planning for a future instead of having to worry about it.
Now let's talk about estate planning, because it's the topic that everyone puts off. It's not exciting dinner conversation, but it is one of the most important things you can do for your family. Without the right documents, you're leaving them a mess. Banks won't release the funds, doctors won't know who's in charge, and your loved ones are left guessing. So they're grieving and they're trying to sort out a paperwork nightmare.
I mean, you picture this, right? Like a family member, they have something happen to them medically, right? And suddenly now they can't sign their name. They can't access their retirement account or sign a tax return, can't transfer property. Simple things become impossible. If the paperwork's not ready, then everyone's stuck with not knowing what to do. Well, even if they did, they can't do anything. We've seen it happen. It's heartbreaking, but that preparation prevents pain. Few hours now saves weeks, months of chaos later.
And that's why we partnered with Trust and Will to remove cost as a barrier. We bought these packages so you don't have to. For a will package, it's completely free. For a revocable living trust, your only cost is retitling the assets. And for most people, these online documents, they work just fine. We have clients worth millions using them. They're legally valid and professionally prepared. And if your situation is more complicated, we know some local attorneys who can actually help you for a reasonable flat fee with those complicated situations. We've taken away the excuses. There's no reason to put this off anymore.
Now, if you're wondering about should you use a will versus a trust, we invite you to check out Podcast 23. We did it about a year ago. It's on our website. You can actually search for it on your favorite podcast player. Now, this is a very in-depth conversation about the pros and cons of a will versus a trust. And you have to understand there's a lot of misinformation out there, and trusts are often pushed by everyone because it's the most expensive option. It's the most expensive solution as far as the attorney is concerned or the document preparation company. And again, it's not because it's the best option for the person. It's because it's the most profitable for them. We have never received a dime of compensation of helping somebody with their estate planning documents. So we have zero agenda here. We're just trying to help you understand what the right choice might be for you and to understand your options.
Speaking of comparisons, let's talk about what sets this team apart from the competition. Jerry has been in the industry for 43 years, including 17 at Merrill Lynch as vice president. In 1999, he moved our clients to First Union Securities, which became Wachovia, then Wells Fargo Advisors, and in 2015 opened Tennessee Wealth Management, still with client assets held by Wells Fargo Clearing Services. That's a track record you can verify. That's the winning team, and that's experience that you can count on.
So people ask, how long do I plan to work? And the answer is, well, I guess until my body retires me. I'm in the office 6 to 7 days a week. I actually love what I do. If I quit, I'm going to have to go home and tackle 5 acres of yard work, which is pretty terrifying, at least in the summer. Jared Hubbard, my son-in-law, who happens to be married to Megan, he's our primary portfolio manager, and he and I discuss the strategy virtually every day. Sometimes we even break out into a couple of arguments about it. But we're always talking about the markets, opportunities, and what's next, okay? Megan, Susan, Amber, which is our operations manager, they keep everything running smoothly. So if I happen to step away for a week, clients don't miss a beat.
They might enjoy it if you did that. I wouldn't, Jerry, though. I'd miss you. And here's another thing to think about. Most people spend more time researching a TV purchase than who their financial advisor is. You read reviews. You compare features. You check prices at 3 different stores on everything. You watch YouTube videos to read watch a consumer report. You're overdoing it with things that are way less important. You spend hours making sure that you get the best deal on a TV. But when it comes to someone managing their retirement, I just go with, he's a nice guy. No research, no comparison, slap a high five, no due diligence. You'd never buy a car without test driving it and comparing options. You'd never hire a contractor without getting multiple bids. You wouldn't draft a player on your favorite NFL team without watching all the film and knowing the other options to draft. You wouldn't marry someone without dating them first. Your financial future deserves at least that much homework. It deserves comparison shopping.
So here's your assignment. Tonight, pull out your statements. Do you know your 5-year return? If not, that's a red flag. If you do, compare it to what we've shared today. And if there's a significant gap, you might have room for improvement. You can't fix what you don't measure, and you can't improve what you don't track.
Many of you are in the 3rd or 4th quarter of building your retirement nest egg. The clock is ticking, and unlike football, there's no timeout and no 2-minute warning. There's no halftime adjustment coming. If your performance has been mediocre, now is the time to do something about it. Waiting another 5 years could cost you hundreds of thousands of dollars. And that's not an exaggeration. Do the math.
So let's close with a story and put all of this kind of in general perspective. A few months ago, a listener named James, he called in after hearing the show. James was basically around 71. He'd been with the same advisor for 30 years. He'd never questioned anything because his advisor was a family friend, played golf together, basically even went to the same church. They were buddies and they trusted each other. Loyalty is admirable, but it shouldn't come at the expense of his retirement.
When James finally compared his numbers to ours, he was quiet for a long time. I could see him doing the math in his head. His 5-year return was around 7%, and ours was over 18%. On his $600,000 portfolio, that difference was tens of thousands of dollars every year, year after year after year, for 30 years. He looked up and said, "How much did this cost me?" We did the math together, and the number was staggering. James said, "I've spent 30 years assuming I was doing well because I had no idea what well actually looked like." He trusted his friend without ever checking the numbers. He'd assumed that loyalty was enough. Unfortunately, it wasn't.
Well, James made the right choice. James made the switch, and he's already seen a significant improvement. But what stuck with us was what he said later. He said, "I compare prices at the grocery store." It's like we're talking about. "I compare gas prices. I drive an extra mile to save 10 cents a gallon." That's the power of comparison, you guys. It turns assumptions into answers. It turns hope into a game plan. It turns "I'm doing okay" into "I know exactly where I stand."
And let's not forget the 4 get 1 frees that are all still available and waiting for you. They're designed to help you take care of certain things. Morningstar Report, which is a plain English explanation about what you own and what your possible benefits might be. Retirement cash flow analysis called Envision to help you with your future as far as retirement plans are concerned. Free estate planning documents through our Trust and Will partner online. And Assigned Football by Erik Ainge, just for the fun of it. No cost, no obligation or catch for any of this, but you do have to give us a call.
So the number, if you decide to make this next step, is 865-415-2070 for Jerry's Ask Anything in 20 Minutes chat. Investments, retirement, estate planning, whatever's on your mind. It's free, it's easy, and yes, that number rings straight to his cell phone. You can also email us through theorganizedinvestor.com.
So visit our website to see samples of the Morningstar Report and cash flow analysis. There's a 20-minute video where Megan covers most of these topics, and our podcast page has all of our previous episodes if you want to dig a little bit deeper. Follow us on YouTube, LinkedIn, and your favorite podcast player.
So to recap everything we've discussed today, we've showed you our receipts, 33.2% year-to-date, 18% over the last 5-year period. We've explained the lower fees, avoiding hidden costs, being more selective with the investments, how all of that drives results, okay? We've talked about approaching your advisor relationship as a hiring decision, checking references, asking for proof, asking for performance numbers. And we gave you something to compare against your own statements tonight.
One final thought from me. I've been saying it, but this one's really been hitting me. You comparison shop. We all do for everything else in life. You compare gas prices, grocery prices, houses, TVs. Don't skip that step for the one thing that matters most, your financial future. We're not asking you to trust us blindly. We're asking you to compare, like Jerry just said. ask for the performance numbers. The numbers are right on the website for Tennessee Wealth Management, too. You can see how it stacks up against yours. Not a sales pitch, common sense. TheOrganizedInvestor.com.
The only thing we can't do is help someone who never picks up the phone. We can share all this information on the radio, post all our results on our website, offer all these free services, but it only matters if you take action. So please take that first step. Call Jerry, send an email, visit the website, do something.
Sound like I'm going to be busy. So we go to great lengths to explain what we've done, how we did it, why it works. Some people are going to respond, some won't. That's just the reality of it all. But all we can do is hope that you hear us with our opportunity that's knocking. Please don't leave us out here wondering if anybody's inside.
That's it for today, guys. Thanks for listening to The Organized Investor Show. You can follow us on social media. You can search The Organized Investor on your favorite podcast player. Again, that's East Tennessee's Financial 4 from Tennessee Wealth Management. Erik and Susan Ainge, Megan Hubbard, Jerry Goodman, Saturdays at 11, Sundays at 9. Thanks for listening. Check the numbers. Check your receipts. Ours are at theorganizedinvestor.com.
The information covered and posted represents the views and opinions of the guests and does not necessarily represent the views or opinions of the Organized Investor or Tennessee Wealth Management. The content has been made available for informational and educational purposes only and is not intended to be a substitute for professional investing advice. Erik Ainge is a host of The Erik Ainge Show on 99.1 The Sports Animal, weekdays from 9 to noon. He is not a client of Tennessee Wealth Management, but is compensated to both promote and co-host the Organized Investor Show. Opinions expressed are subject to change without notice and are not intended as investment advice or solicitation for the purchase or sale of any security. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning or before making any investment decision. And please consult legal or tax professionals for specific information regarding your individual situation. Brokerage and advisory services are provided by Tennessee Wealth Management through Prospera Financial Services Incorporated. Member FINRA SIPC. The Organized Investor is a brand name operated by Tennessee Wealth Management for educational platform purposes.
At the Grimes Agency with Goosehead Insurance, getting a quote has never been easier. With our industry-leading online quoting tool, you can answer a few simple questions and see real-time quotes from over 30 A-rated insurance companies right on your screen or phone, often in less than 30 seconds. The entire process takes about 5 minutes, giving you instant access to real prices so you can make sure you're getting the most competitive option for your home and auto insurance. Your information is never shared, sold, or sent to third parties. Everything goes directly to the local Goosehead Insurance office where Mike Grimes and his team review your results, run your reports, and confirm your final quote when you're ready. Call Mike Grimes at 865-281-1267 or visit www.tn.insure today to experience the future of insurance shopping. The Grimes Agency with Goosehead Insurance. Insurance the way you always wished it was done.
For more than 50 years, families, businesses, and neighbors have trusted one name to make life's biggest moments unforgettable. Rosa's Catering. Family owned, locally grown, serving this community since 1971. And now, Rosa's is taking hospitality to new heights. Literally, inside the iconic Sunsphere, Knoxville's shining symbol from the 1982 World's Fair. Introducing Sunsphere Events. 2 breathtaking floors of panoramic views, elegant gatherings, and the warmth only Rosa's can provide. Whether it's a wedding in the sky, a corporate reception, or a celebration with friends, Rosa's and Sunsphere Events bring people together beautifully. Visit rosascatering.com or sunsphereevents.com to plan your next unforgettable event. Rosa's Catering, a Knoxville tradition since 1971.